Welcome back to U.S. Farm Report this weekend. A big weekend to talk markets with WASDE, crop production just coming out. We have Joe Vaclavik of Standard Grain and Matt Bennett of agmarket.net to talk about the reports. Joe, to start us off, though, yield. We figured that we were going to see a yield adjustment there, but were there any surprises out of these USDA reports?
You could call the yield numbers surprising to some degree. The numbers were slightly lower than what the trade had expected, but not super bullish versus expectations, I don't think. And USDA did what they typically do when they cut supply, they also cut demand. So we ended up with carryout numbers, especially in the case of corn, that were actually larger than expected. The soybean carryout number was lighter than expected, but USDA did, again, what they normally do. They cut demand as they cut supply, which I think is warranted given the pace of things like new crop export sales. It's very, very early, but I don't think that they were unjustified in making those demand cuts.
Okay, we will get into how these yield estimates were gathered this month compared to July. But Matt, when you look at the report as a whole, what stands out to you?
Coming into the report, it's something that I've been talking about this week is that, as of August 1, you've got to assume the USDA had the room to go ahead and make a yield adjustment lower. We just had a massive rain event this past weekend over a pretty good chunk of the Corn Belt, which would lead me to believe that if the bean yields especially are as of August 1st, they're probably going to be discounted somewhat, which, you could say that it was a friendly report from a yield standpoint, both corn and beans. But at the same time, whenever you're looking at yield, whenever you're looking at carryout, it was all within the range of trade guesses. Now, if we would have had something that would have been outside of those ranges, maybe we could have seen more of a pronounced reaction, if you will. But I think it's pretty clear after the report was released, you had a little bit of a bump in the market. And then all of a sudden, we kind of traded back towards unchanged and is very blasé trade after that. And I believe that that's a true indication that the trade's taking a look and saying, you know what? Yeah, maybe yields are down a little bit as far as the print for this report, but it's as of August 1st. So I think people have discounted it.
Yeah, this was the first farmer survey. So, Joe, how does USDA for this report for August gather their yield estimate, and how is that different from July?
The stuff prior to August is more of like a formula-based approach. They have formulas that are based on a number of different things. This is mostly operator survey. And to go back to the date thing, I mean, that rain event that Matt mentioned, that was probably the biggest rain event of the whole summer that happened last weekend, and it happened after August 1st. So I don't know what degree of that, if any, is reflected in these numbers. If that rain event is totally excluded from the numbers, then you could argue that the yield numbers are old news, even as we discussed a report that was just released an hour ago,
Yeah, and Matt, you said the same thing. You said that based on that rain event that happened after August 1st, we could see this soybean yield continue to climb. But when it comes to corn, do you think that USDA is in line with where our national yield is today?
I guess, Tyne, some people are probably going to disagree with me here, but I feel like the timing of the rain events this year was actually pretty darn good for enough folks that we're going to have better corn maybe than what some are expecting. And so I know we had, drought monitor that showed us a lot of stress throughout the Corn Belt. You would assume that the yield would really be challenged. But, a lot of folks were able to get rain right before pollination in a pretty large scale rain that was very similar to what we had this past weekend. And so I do think that this corn yield has a chance to move higher. If I was going to be betting one way or the other, for both corn and soybeans, I would assume that future reports are going to see yields maybe climb a little bit. A lot of it has to do with a really good finish. I know that you're talking about a little bit warmer and drier in the 8 to 14 day forecast as we head into the weekend. But at this time of year, most people like to see a little warmer, drier forecast, especially after getting so much rain.
Joe, a week from Monday, we're going to be heading out on the Pro Farmer Crop Tour, so we'll have boots in the field looking at that. But when it comes to corn, do you think USDA maybe too low and this corn yield's actually growing?
I think it's a possibility. I think the crop tour will be interesting. Here's one thing I'll point out. I'll say something that's actually not super bearish in nature. If you look at the stocks to use ratios and what USDA is projecting, the stocks to use ratio for soybeans, given what was printed today, is south of 6%, which is very similar to what we've seen the last 2 or 3 years. In the last 2 or 3 years, you very often saw soybeans at $15, $16. Now, the opposite is true of corn. We've got a stocks to use ratio projection in corn that's like 15%. And that's a level that was associated with like the dog days from 2014 through 2019. So I could say something friendly about the bean market, given the projections on paper. A lot harder to do it with the corn.
Well, there were definitely some revisions made to demand. We'll take a look at exports coming up on U.S. Farm Report.